The stock market's been volatile, and people are asking us if CDs are a good investment during these inflationary times. Today, we're going to discuss whether CDs are a good investment, as well as other solutions you might consider. Stay tuned. Hey there, it's Anthony and Alex from 1 Degree Advisors, and if you're new here, we help folks with all things retirement, tax, and investments. So Alex, we are in a bad investment environment where it just seems that nothing's working. Domestic and foreign stocks are down. Bonds are having just about their worst year since the Great Depression. Real estate's starting to soften. Even things like gold are not doing very well. And now interest rates going up, are CDs a good investment?
Yeah, I mean, let's also add to that, inflation is also sky high. So not only are people losing money on their investments, it's really like a double whammy with investment losses. Then you also have inflation on that, compounding the problem. And so people are rightfully, they're looking for solutions to help beat inflation and protect themselves.
The last time we experienced inflation like this was really in the 70s and early 80s.
Yeah. And the difference back then were interest rates were also high, right? So we had high inflation, but we also had high interest rates. So people could earn a pretty good rate of return on their CD at the bank. So let's do this. Let's take a look at this chart showing inflation versus the federal funds rate. And this is going from like 1973 through the end of 82 here. And what we can see is that the federal funds rate peaked at over 19% in the 80s. Point being is that you were able, again, to earn a pretty good rate of return on those CDs.
They tracked pretty well.
Exactly. Now you compare that to today, and inflation is way above the federal funds rate. So we'll pull up this chart by JP Morgan. What you're looking at here is the 6-month CD rate is this gray part here, right? So this kind of gray color here. And headline inflation is the blue color. So you'll see back in the 80s, you could earn a rate on your 6-month CD that was pretty well exceeded headline inflation. So, that was a pretty good.
You weren't losing real value. You were gaining a little bit just by having your money in the bank.
Exactly. We fast forward to maybe say the 2010s, and what we'll see here is that it drops dramatically. So now your 6-month CD rate is basically 0.5%. Meanwhile, headline inflation is 1.8%. So still, you're losing value. It's not as dramatic, but you're still losing some value. Well, let's go to 2020, at least so far, and we'll see that 6-month CD rate is 0.3%. Meanwhile, headline inflation, 5.2%.
Right.
So the environment is definitely different, and it's one of those things where it's posing a lot of challenges for people because you need to understand your investment horizon and what you're investing for. Right? Not just, am I going to put everything in CDs because I'm nervous and I need to get out of the market, but what are you investing for? Are you investing in CDs for just a short-term period of time, meaning, hey, if I need liquidity relatively quick, I know that I have my CD there, but I'm going to let my investments just continue to grow over here. I know they will be volatile. Having in your mind the difference of what those two things can do for you is really important.
Yeah, and both of those numbers have come up a little bit since the posting of this chart. So inflation's a little bit higher. It's above 8%. CDs, you can get in that 2% range, which seems great, compared to where it was, but there's that huge gap right now.
And Anthony, you wrote a post talking about how baseball can teach us a lot about good investors. And so we will post that in the show notes. Highly recommend for people, especially with market turbulence this year. And then here's the other thing too, is that we find that you have folks who are worried about the current investment markets, especially when they're a little bit older and they're taking income in retirement. So we'll post to a video we recently published called 3 Retirement Withdrawal Strategies for a Down Market. People can watch that, might find that very helpful.
Yeah, now here's the thing too, is that cash, it may not be giving us exactly what we need, and we know we're going in losing real value. We still do recommend that people have cash on hand. Mm-hmm. So whether that's in a CD or even some of like the online savings accounts like Ally, Capital One, they're paying a decent rate. So having some cash reserves can make you a better investor, allow you to keep your long-term growth assets invested, deal with the volatility for the long term.
Absolutely.
Have rising interest rates changed your views on bank investments like CDs or even savings accounts? Leave your thoughts in the comments down below. And if you like today's video, please like and subscribe for more. Thanks for watching.